such an asshole!
AssholeConsulting.com. Go there if you have questions, and this young man has a question. I've been a long fan. I've long been a fan. One of these days I'll learn to read. I've long been a fan of Harry Brown's permanent portfolio, but a few months ago found out about a modified version called the Golden Butterfly Portfolio. I'd like to know what your opinion is upon its design and goals it stated, and whether or not you think it will be able to live up to those goals and the kind of enjoy the decline type of economic future you foresee. I predict nothing. I cannot predict anything, and that makes me the world's greatest economist, because I at least know I don't know anything about women, which is the first step in actually understanding and being successful with them. I know that you will say, pay off every debt first, then go gold, but assuming that I'm going to be saving something regardless, would the Golden Butterfly be a reasonable method to do so? The short answer is yeah. I looked into it because I had to look up the permanent portfolio. Let's explain so for the readers or the viewers. Harry Brown, Libertarian presidential candidate, if I remember my history correctly, said divided into four things: cash, gold, or precious metals, stocks and bonds. Quarter. And then it's a very simple, invest in this and it'll do all right. And then there's historical analysis. Yeah, it did all right. And I don't remember how it did compared to the S&P 500 or a similar index fund compared to it. So there's that. Then this modified version comes up. I took the notes here. The Golden Butterfly. They divide it into fifths. It's supposed to be a butterfly. So you got two components of each wings, and then in the middle is the body. In the middle is gold, and then on the left wing it's small cap stocks, and then large cap stocks. So those one wing, two wings are components of it. And on the other wing, short-term bonds and long-term bonds. And then you go and you look it up, you do the research. And the whole point of it was, okay, well, if we include some other asset classes, investment type categories beyond cash, bonds, stock, and precious metals, but provide 5 components, we can get more or less the same returns with lower risk. And you could go ahead and look at the data. It says, yes, it kind of more or less does that. Going back to the 1970s, they went back at the different research and statistics. I said, so here's my take on it. Well, yeah, it's going to be lower risk. It's lower risk because you just added more components. Anytime you add more components, unless they strongly correlate and therefore exacerbate a component of the portfolio that will make the overall portfolio beta, or otherwise volatility, the price change, percent price change. But if you just throw something in and there's already 4 asset classes in there, and it's going to typically cancel out and result in less volatility. Now, the goal of every portfolio manager is to have less volatility with the same amount of growth or the same amount of volatility with higher rates of return. This does that, but it's nothing new that hasn't been done already. It's just further diversification. After a while, it's going to be the golden caterpillar. Then it'll be the golden porcupine, where each quill counts for that. And then what you're doing is you're just investing in a large S&P 500 index fund plus gold. So for the key thing where you're concerned about, will this help in an enjoy the decline type of environment, that's why you have precious metals. And I've done the study before where it's very ballpark figures, but you could expect precious metals to increase anywhere from 30 on the low end to 100 times its current day purchasing power. That depends on how much economic productivity is left, the supply of silver and other competing precious metals. But when you have precious metals in there, that's the insurance part. If you have enough of it, it's going to more than compensate for the loss of if it truly collapses, all the wings fall off, you still have your gold. So that's kind of there's nothing more to precious metals than insurance. The real issue is how much do you recommend? I recommend 200 ounces of silver per person. That's it. And then and then if you want to insure your wealth beyond that, take whatever amount of wealth you want to insure and divide it by 50, and that's how much in today's dollars you need to purchase silver. So it's you get a 1 for 50. But again, that's a ever so rough estimate. But yeah, it's fine. I see nothing wrong with it. It will insure, as long as it has that precious metals component in there, it will insure against a collapsing economy. The historical data that they showed less volatility and a relatively same amount of growth, depending on what time period you want. But remember, I mean, after a while, you start diversifying more and more and more. Soon, you might as well just be investing in the broad market. So that's kind of. And here's the other thing. This is why I told you up front. It's all bullshit. Okay, it's all bullshit because you're saying, well, in the past it behaved like this. Yes, because we all know the future is exactly going to be like the past. We're just going to do the exact same thing every day, and there's no such thing as inherent dynamism or chaos or anything like that in the market. No, it's just going to keep on going the way it. There's very little to be said for these crystal ball lookers who always look to the past, and they don't have true independent analytical thought and thinking outside the box and saying, hey, wait a minute, we ought to try something different. But yeah, it's fine. The golden butterfly is fine. Just be looking for the golden porcupine, as I said, where there's 1,000 different investments plus gold. Best of luck. Toodles.